Hi, welcome to the Market Alert for Wednesday, the 25th of January 2017. So yesterday, very interesting day. As I said in yesterday's Market Alert, that the daily chart was showing that the rounding over we'd seen up to the run of Trump's inauguration and just following it had stopped, and there was support in the market, and that's why we drew in the let me just show you, drew in the 62 and 76% retracement yesterday, and there we saw the market then driving up to these levels. And as I said in the note that I sent out yesterday afternoon, watch the 19,919 level. So during the session we saw the market opening up. We saw the market with the buy signal. This was filled. It was then followed by a sell signal, which I thought at one point we were going to see this trade stopped out, but then the market continued to move higher. I'm going to fast forward a lot in this video. So the market drove through. When it drives through, you just see that when it drives through the scalp price, like you see there, that's the scalp line. It drives through, then you start trailing the stop, and I haven't covered every single one here. You can see how as we go through the session that I just keep moving this up as prices move up, and then again, and as I said in the note I sent out, I had to get out of the market before just going off to our weekly time together, ballroom dancing, and there you'll see nothing happened now, left the chart as it was, and the market then through the orange line there, which is the 19,900, which I'd put onto the chart, and then you see a sell signal coming into the market, which would be daft because we know that we're heading for that 20,000. The implied volatility is low, and also it's got to be done before we can move lower. Now going back to the daily chart today, we can see that the 20,000 is on the card so far. There is low volume in tick volume. We'll have a look at the other volume first in the daily chart from the end of day volume as well. And if you've not seen the video about this, then I will leave a link again in today's Market Alert. And it's very important. I'm going to come to that in just a moment as to why what I put out nearly 2 weeks ago has been confirmed. I'm going to cover that also in just a moment. But let's just bring up the daily chart with the real volume in it so that we can see what sort of volume we're getting over the last few. So here we have the real volume, the number of shares traded. This is the daily chart, and you can see that we continue to have this huge volume. And on this day, let me just bring up the data box. On this day we had the 19th of interestingly enough, the day before the inauguration, we had another massive spike in the volume here, and the market then moving to the upside, and we're going to see this level taken out as the market goes to the 20,000. In the weekly chart, we still got a lot of volume, massive volume here, and again this sideways move, this is just a pure and simple distribution of the pros getting out of the markets, and you'll see why in a minute, just to confirm something that I was shown many years ago, 3 years ago, and the monthly chart as well. We've had no volume since 2009 to talk of. It's actually declined until we got to last month, December, where the volume has increased massively. The prices are sideways and the volume is growing. This is a distribution of the pros getting out of the market. And just to confirm this and prove this, you can see this headline first: $1 trillion plan sends stocks to record highs as volatility hits record lows. And this one, something, as I said, I recorded 2 weeks ago, based upon years of experience and what I was taught back in 1993-94. You're buying, they're selling. Big bank execs dump 100 million in stocks as market soared. Now, I'm not going to read all of this, but I suggest you have a read because it makes for fascinating reading. Bankers sold over 100 million worth of stocks since the presidential election, and it's not just one. Goldman Sachs, JP Morgan, Morgan Stanley. Further selling may be installed. Not all big banks have filed reports on selling all their top exec checks. So the big boys, as I've always said, move the markets, and they will offload to the general public, as the market moves higher, and that's precisely what you're seeing, or I've been seeing since the beginning of December. On the implied volatility front, we've got a drop down to 906, and again you can see that in the chart, and this is again consistent. So the scenario is this: we run up to 20,000 and above for a day or two, and then something's going to happen that's going to ruin Trump's party, and we see the market correct. There's too many things that have come together here for a massive correction not to take place, and that is, we've got a distribution of stocks, which we've just seen when we look at the real volumes, and we've got the implied volatility down at these levels, also the historic volatility, and we know that when we get down to these levels we always have a major correction in the market, or a big sell-off as well. So everything is there. I can't give you the date or time, but there will be a way of monitoring this, which I will go into more details in subsequent market alerts once we get a bit of a break to the downside. So that's it for today. A lot of things going on here. I also noticed, if I can find it quickly, that Trump was spending $1 trillion on infrastructure. But the trouble is with that, again, they're printing money in order to do that. And once you start printing money, it's just impossible. I don't know why he's doing it. He was going to get rid of the debt, but we all know that that's impossible to do. So he's going to give the impression he's doing no different than anybody else has done. And there's no surprise there. He's not going to drain the swamp or anything. He's got Goldman Sachs bankers working with him as well. No, I can't find it. But the inside of Zero Hedge, there was a $1 trillion infrastructure plan as well. But he's got to borrow the money in order to do that, and it's just a complete and utter waste of money and time, because it isn't going to alter anything in the end of the day. They've still got to find the money to actually pay the interest on this debt. No, can't find it. It's definitely in here anyway. Oh, there it is. We saw it earlier. Yeah, the $1 trillion plan. Yeah, already covered it. Thought it was a different article, but it's not. So yeah, that's what it is. The $1 trillion plan, and it isn't going to work. It might work in the short term as far as providing jobs, but longer term, it's not going to. Right, that's it. I will see you in tomorrow's. Thanks for watching. See you in the next one.